How's it going, everyone? Today I'm going to be going over with the silver bullet, the well-known silver bullet from ICT teachings. I'm going to outline the topics about the why are silver bullet traders not profitable. Uh, there's a couple of reasons for it, guys. So uh, I think this video will be an eye-opening for you. There's a couple of reasons, but there's one that a one reason that has a big effect on technical side of Silver Bullet. Now let's talk about what the main reasons are. The first one is that you're rushing the process. Guys, listen to me because rushing the process means that you're expecting something that is non-existent. Just because you saw on the TikTok that people are making thousands and thousands and six-figure money from this business model, it doesn't mean it comes as easy as they show you. The second one is not understanding draw on liquidity. Second one uh, is really important from technical side because not understanding draw on liquidity means that you're pretty much gambling. And the third one, and the important one as well, you have a lack of experience. You cannot learn markets in 2 months. You cannot master markets in 3 months. Either for some people, you can't master in 6 months as well. You need to backtest, collect data, and stay consistent. First of all, let's talk about what Silver Bullet is. Silver Bullet is a trading model, which is a time-based trading model. What does it mean? It means there's specific times of a day where this model occurs only. It happens during London session and during New York session, New York AM session, and New York PM session. What are the times? What are the which are the correct times? Let me tell you. So silver bullet setup times are mainly during London, during New York AM session, and during New York PM session. On London session, you trade silver bullet during 3 to 4 a.m. On AM session, you trade silver bullet during 10 to 11 a.m. and the PM session on PM session you trade silver bullet during 2 to 3 p.m. The silver bullet is a trading setup in the teachings of Inner Circle Trader ICT that forms every single trading day. Once the sell side or buy side is been taken and the displacement occurs, you wait for the fair value gap to form. When it does, you expect it to be traded into the repriced to a pool of liquidity that would be opposing from your entry. The silver bullet can be found on various time frames, guys. You can find silver bullet on 5 minute, on 4 minute, on 3 minute, on 2 minute, on 1 minute, on 30 second, or even 15-second time frame, guys. These are the time frames, the entry time frames where you can find silver bullet model on 5 minute, 4 minute, 3 minute, 2 minute, 1 minute, 30 second, and even on 15-second time frame. For some people, this might be really a new thing, and they might, for some of you, you might think that this is nonsense because 30-second and 50-second chart uh, is really chaotic. But you guys need to understand that price is fractal. Any time frame is the same because whatever happens on 1 minute could happen on 30-second chart or even on 15-second chart, and whatever happens on a hourly 4 hour doesn't matter, can happen on lower time frames, guys. So once we realize that, let's go over with the live examples of the silver bullet. So here, as you can see, let's mark out our 10 a.m. This is an AM session silver bullet, guys. I'm mainly going to talk about the AM session silver bullet. That's what I'm. If I trade, that's what I'm mainly trading. But it's markout of 10 a.m. and 11 a.m. This is the time. This is the time box that we are trading. So what's the important things that we need to understand trading silver bullet? We need to understand the drawn liquidity, which is a previous daily high and previous daily low, or previous weekly highs and previous weekly lows, or previous session highs and previous session lows. In this case, I want to give you the really hard example for you to uh, for make it easier for you for on easy easy examples. In this example, we don't have any daily or weekly targets, guys. We're at all-time highs. NQ is currently at all-time highs. We don't have any higher time frame targets to have a drawn liquidity as a drawn liquidity. But what you need to understand is we're not trying to catch tops, guys. We're trying to follow the market, right? When market is at all-time highs, you're bullish till it fails. So we are bullish in this case. So if we're bullish, what are we looking at? We're looking at a sell side to be taken, a displacement to occur to your way, and then take a trade from it. So as you can see, after 10 a.m., price took out this sell side liquidity that formed here. After the sell side had been taken, we see a big push to the upside, which is a displacement in the market. So after this displacement, this big of a displacement, it can mark out your PD array, your discount and premium array. Where is our where should we enter? We should enter on the when the price is in a discount, and we enter with we as an entry we use fair value gap for our entry. So as you can see, price has a displacement, came down into the discount, and this is your entry. This is your entry. This fair value gap is your entry. Let's say maybe you don't want to enter here. You want to you want more confirmation. For more confirmation, you can be entering here. But I've got a good solution for people like who don't want to enter here aggressively and want more confirmation. You can enter on a 15-second, in this case 15-second or 30-second confirmation when this sell side's been taken. On 15-second or 30-second time frame, this could have been a displacement, and this is a retracement to the fair value gap, and you could have entered long over here, put your stop on the low and TP on the opposing liquidity. But let's say you have a 30-second time frame, as I don't have right now. So the solution is you use inversion fair value gap entry. So let's go on a 3-minute time frame. As you can see here, this is a trade that I took exactly, guys, like with the premium members in my Discord. So here, as you can see, if we don't take this 3-minute fair value gap here, we have an bearish fair value gap. We're not shorting this, we're longing from this. So this is a confirmation entry for us to go long from. When price disrespects this bullish fair value gap, it becomes what? It became what? An inversion fair value gap. Fair value gap. So we can go long from a candle close or either a retracement. You put your stop on the low and you target the target what it maybe target fixed 1 to 2 risk to reward, or you can use standard deviations in this. Because of this, you can target -2 to -2.5 deviation. You can do this and target this, cause good encroachment of that, or even go crazier and target fourth deviation. As you can see, price. So let's go on a higher time frame on 1 hour. So let's remove this for now. So yes, we have this all-time high here, this buy side liquidity about up there. But what do we see before we enter in a trade? we see price has a significant move to the upside. It has a displacement. But while we see this, when we see this and price taking out some sort of higher time frame buy side liquidity and as well as this buy side liquidity up here, we don't anticipate that price will rally up here like crazy. It won't. Mainly it won't. It will be a really low probability idea, in my opinion. So after taking out this higher time frame buy side liquidity and making a displacement, also closing and a 1 hour candle, which makes a fair value gap here, you anticipate price to retrace down here. Now that we have a bias that we're bearish, I'm looking for a bearish setups to form. Let's go on 1 minute time frame now. So this is my drawn liquidity, this 1 hour fair value gap, right? So when you have that drawn liquidity, this is a sell side that I'm targeting. At minimum, this is a long hanging fruit you should target. So what do we see here after taking out the buy side? After taking out the buy side on 10 a.m., let's mark 10 a.m. From this range, we see price taking out this short-term highs of right here and this short-term high here as well. After taking out that short-term high, where is the market structure shift and where is that low for market structure shift? Here, this is a swing low that we formed and we had a displacement below it. We're leaving a fair value gap behind as well. We left the fair value gap and also a good confluence that I can see that I entered here. You'll see my entry screens somewhere around here. So also a good confluence is that we just disrespected this bullish fair value gap. This is a good confluence that we're going lower. If price is bearish, it is going to go down from here. So you enter on a bearish fair value gap or on inversion fair value gap and put your stop on the high and target the 1 hour fair value gap. As easy as it is. You just need a bias, a correct bias. Don't just blindly and mechanically trade. And after having a bias, the entry is the easiest option. Entry is the easiest. So let's sum everything up. What do we need to trade Silver Bullet profitably? We need to have a narrative, which means that we need to know when price is most likely going to retrace and when is price most likely going to expand, right? That's how you'll have a really high win rate on Silver Bullet. You will avoid so many mistakes while trading it, and this is how you don't not how you not gamble in these markets. Hopefully you guys enjoyed the video and learned something new. If you did, subscribe to the channel, like the video, and share it with your friends. Feel free to join the Discord group that I have. It's constantly growing and it is full of fellow ICT traders. Goodbye and have a great trading.